Hey everyone, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. All right, folks, so today BlackRock's Bitcoin Income ETF went live. And this is significant. We know BlackRock has the largest Bitcoin ETF, and now they're adding a yield product, which I think is going to attract a lot of inflows as Wall Street is always looking for inflows. And BlackRock has the brand as the world's largest asset manager. So, opening for trade on Tuesday, BlackRock's newest Bitcoin exchange traded fund, the Bitcoin Premium Income Fund, is less about market timing and more about meeting a growing range of investor needs as the asset class matures, according to Jay Jacobs, the firm's US head of equity ETFs. Here's a quote. "This is something we had as an idea for a while," Jacobs told CoinDesk in an interview. "Irrespective of market conditions, you've seen that there are investors across the spectrum looking to generate some amount of income off of still having a mostly large, mostly long position to Bitcoin." So this is something we want to monitor and see what the inflows look like. Obviously, they're launching it in a bear market, but this may be a great time because if the asset is just sitting there, folks can earn income off of it. So, or a yield, I should say. So this is really, really great. And in fact, BlackRock's chief investment officer, Rieder, was on Bloomberg, and he said Bitcoin is ultimately going considerably higher. Let me play the clip for you.
One of your mutual funds, I believe, still owns a little bit of Bitcoin. And you were one of the early people inside BlackRock to get into it.
Yeah.
It's now sold off 50%.
Yeah.
Is it a buy now, or are you going to wait more?
Wow, these are specific questions. So, listen, I think it's ultimately going considerably higher. I think the technicals, there's some technical condition around it that causes it to chop around. I think it's ultimately going higher. We're keeping it a pretty moderate exposure, quite frankly, because I think there's some other things that we talked about in technology and some of the growth engines. By the way, there are places to get yield and things like some parts of the credit markets, EM, that I felt like it's just okay today, and so we've reduced exposure. Ultimately, I think it's going higher.
So there you have it. We have to have the macro view. I think that's what BlackRock has, and they're obviously allocating a lot of their clients' funds to their Bitcoin and Ethereum ETF product, and obviously now they have the Bitcoin Premium Income ETF. So the market cycles are playing out, and again, we are still in a bear market. Obviously, yesterday I showed you guys on the chart that a bullish divergence is forming on the weekly chart, but we got to give it time. It has to play out, right? The market has to do its thing. So let's see if we continue to go higher, possibly up to about $76,000 or so before potentially rolling over to lower lows. I'm not saying that's guaranteed, but that's a scenario you cannot rule out. Or the bottom is in and we are going to slowly and steadily grind our way upwards. And I don't think this is going to be a move to new all-time highs. So just make sure you have those expectations. I'm personally accumulating. Even if there's one more move downwards, that's okay. We've dropped more than 50% here. So I consider this the bottom zone where, it's a really great accumulation opportunity. Now, a lot of the big money folks continue to buy the dip. So Bitcoin miner Mara bought 1,000 Bitcoin worth $66.7 million. We've been seeing Michael Saylor and other Bitcoin treasury companies have been buying as well. And here we got a report that Bitcoin buyers add over 250,000 Bitcoin between $59,000 and $67,000 as accumulation returns. So this is per Glassnode data, the on-chain metrics. So a lot of whale buying, a lot of big money buying here. So they've been doing this since June 5th. So that's a very good sign. Again, doesn't mean we're going to pump to the moon tomorrow, but it's going to be the slow, steady move here. And obviously expect volatility. Tomorrow is a FOMC hearing with the new Fed chair, Kevin Warsh. So let's see what news we get and what impact that has on the markets. Now, Coinbase launches one-to-one backed tokenized stocks, giving holders actual ownership of U.S. company shares with trading, dividends, and redemption all handled on-chain. This is significant, folks. It's what we've been talking about, right? The token economy, everything running on blockchain rails. And eventually these markets, the stock market, crypto, and others are going to be merged, where it's going to be all one market because it's all going to be running on blockchain rails. Now, Coinbase also introduced AI advisor stock options and pre-IPO markets in a finance push. So they're innovating, they're adding a lot of cool things, and they're not the only ones. Other exchanges and platforms are innovating and adding all these things. And I'm very curious about the AI agent support, the ability to review your portfolio, manage it, do all these great things so that you can make more money and be better with your trades, right? So this is really great to see these companies are innovating. And as the saying goes, bear markets are for building, and we're seeing a lot of building. Obviously, these folks are anticipating we're going to be back in a bull market eventually. So it's just getting through the bear market and holding strong and having the macro view. Now, folks, this episode is brought to you by iTrust Capital, which allows you to invest in crypto as well as precious metals like gold and silver via an IRA. You may say, why would I want to invest via an IRA? Well, you get huge tax advantages. So if you do any trades or selling, you don't incur long-term and short-term capital gains taxes. So you're sheltered within the IRA, and you can buy and sell crypto as well as precious metals 24/7. It's low cost, no monthly fee. And with crypto, it's over 90 crypto assets that you have access to: Bitcoin, XRP, Ethereum, Solana, and much more, even new tokens. And with gold and silver, it's not paper gold and silver, it's the physical assets. So if you ever want to redeem it, you can certainly do that. And if you have an existing 401k or IRA, you can simply roll it over to iTrust Capital's version. So huge tax benefits, as mentioned, and pretty straightforward. And you get access to all these great asset classes. They will be adding stocks soon. So you can, again, get the tax advantages by doing all these things within the IRA. They also offer a premium custody account, which is using institutional grade crypto custody. So they use Coinbase Prime, Fidelity Digital Assets, and much more. We know BlackRock uses Coinbase Prime. So you're getting tier 1 level institutional custody. It's a closed loop system. So if anyone hacks into your account, they can't withdraw funds because the funds only go to your bank account. It's low fees. So this is a great option. You can sleep at night knowing your assets are safe. I have an account with them. And folks, if you sign up with my link, you can get a $100 funding bonus. So you got to go check them out, see if it's for you. It's itrustcapital.com/go/thinkingcrypto. Link will be in the description. Now, big news here. State Street targets stablecoin reserve boom with new money market fund. So BlackRock has set the bar really high. They started the ETF, the Bitcoin ETF, as far as TradFi companies are concerned. They started the tokenized money market fund, and now you're seeing all these other big players do the same thing. But State Street is a huge player, and it's amazing to see them jumping in. So Wall Street's largest asset managers are increasingly competing to manage the assets backing stablecoins, a market that could swell into the trillions of dollars as digital dollars become a large part of the financial system. State Street Investment Management introduced the State Street Stablecoin Reserves Money Market Fund on Tuesday, a government money market fund designed specifically for stablecoin issuers operating under the framework established by the Genius Act. The fund's introduction comes as TradFi firms race to position themselves as key providers of reserve management services for stablecoin issuers. Stablecoins, which are typically pegged to the US dollars, are backed by reserves that often include treasury bills, cash, and money market funds. As issuance grows, so does the pool of assets generating management fees for fund providers. The fund's initial investors include State Street Bank and Trust Company and Anchorage Digital, the crypto-focused bank that holds a federal charter in the United States. So huge, guys. We continue to see incredible adoption, and look at when it's happening, when the value of these crypto networks are down because of the bear market. But that's not phasing these people. They're building because they know where the puck is heading, and I hope you do as well, that you have this macro view on the market. Now, we have some very big news around Ripple and XRP. So Ripple invests in Flutterwave, pushing its stablecoin RLUSD and the XRP Ledger into payments across Africa. So big move by Ripple here. So again, they invested in the African payments company Flutterwave as part of its Series E funding round, a deal centered on expanding the use of stablecoins for cross-border payments. Flutterwave said Tuesday that the funding round values the company at $3.2 billion. Financial terms of Ripple's stake were not disclosed. The deal will integrate Ripple's US dollar-backed stablecoin RLUSD into Flutterwave's payments infrastructure, allowing businesses to settle some international transactions using digital dollars rather than relying solely on traditional banking networks. Flutterwave will also connect to Ripple Payments, Ripple's global payments network, and use the XRP Ledger blockchain to process transactions. Big move by Ripple here. Their stablecoin, the XRP Ledger getting adopted, and Africa is a huge market for cross-border payments. Many different countries, different currencies, and this is a smart move on their part. And we also got news here that Squid, yes, that's the name of the platform, adds Ripple's RLUSD stablecoin for cross-chain swaps. So cross-chain platform Squid has integrated Ripple's RLUSD stablecoin, allowing users to swap into and out of RLUSD across blockchains and digital assets in a single transaction. Squid said developers can also access RLUSD through its tools enabling cross-chain payments, treasury management, and DeFi applications. This is very big. Now, folks, tomorrow I'll be publishing my interview with the head of engineering at RippleX, Ayo Akinyele. And of course, he's doing a lot of work with the Ripple team on the XRP Ledger. So we go through all the building that's happening in the XRP Ledger. You know, how are they handling AI agents, preparing for quantum, tokenization, much more. So you don't want to miss that. That interview will be published in the morning. So be sure to subscribe to check out that interview. Okay, moving ahead, China has signed 26 financial institutions, including Standard Chartered, onto its cross-border digital yuan payment network. Things are really moving fast here across the globe for the token economy, whether it be CBDCs, stable coins, tokenized assets, crypto investment vehicles, and more. So this is something to pay attention to. You know, one of the things I said in the last bull market, and I think my timing was off, but I believe China is going to open up crypto investment via the Hong Kong ETF products to mainland China citizens. Hong Kong, many of you know, is under the control of China. So I think that will eventually come, but they are definitely pushing their digital yuan, which is obviously blockchain based. So this is interesting, and it may this may be a narrative that you know, folks here in the United States within the Congress can use to help push the Clarity Act through. But you know, time is running out for this Clarity Act, man. We got to get it done. And I'm sure many of you saw my interview with Chris Giancarlo, former CFTC chairman, that was published earlier today. If you haven't, check it out, guys. We cover all the major items happening in crypto, including the Clarity Act and what may happen next, prediction markets, what the CFTC and SEC are doing. We also talk about TradFi embracing crypto and how Chris is going to be an advisor for Jefferies for their digital asset treasuries. We also talk about stablecoins versus CBDCs as far as privacy. So you don't want to miss that one. Chris is very, very knowledgeable about all these things. So he gave some great perspectives and information. So make sure you check that out. That interview was published earlier today. Folks, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button. Subscribe if you haven't as yet. And be sure to support the podcast by subscribing to my free email newsletter. It is 100% free. Link will be in the description. Be sure to grab a copy of my book. It's available on Amazon in paperback and digital format. And if you want to expand your knowledge about crypto and blockchain tech, I have a course at mycryptocourse.com. This is a comprehensive course that teaches you everything you need to know, and it features expert commentary. No other crypto course offers that. And right now we have a huge bear market sale. Use the code BEAR, B-E-A-R, at checkout to get 50% off the price of the course, guys. So huge sale. Check it out and expand your knowledge. Knowledge is power. So go to mycryptocourse.com. Folks, thank you so much for tuning in. I appreciate you all, and I'll talk to you all later.